Well, shifting focus to some macros then, and on the surface, the latest US inflation report looks reassuring. Prices barely moved in July, helped by falling gasoline costs, while underlying price pressures remain relatively contained. Wall Street cheered the data, with investors seeing less immediate pressure on the Federal Reserve. Gold hit a two-month high as dollars slipped. The response in crypto was more muted, with Bitcoin hovering around $64,000. But the bigger story is that inflation is still well above the Federal Reserve's comfort zone. And behind the softer headline number, there are signs that the US consumer and the wider economy are under growing pressure. Real average hourly earnings fell 0.2% over the past year, meaning inflation is still eroding purchasing power. Credit card balances have climbed to about $1.26 trillion. That's close to a record, while credit card delinquencies have also risen. For consumers, the issue is therefore less about prices falling and more about wages falling even faster. For the Federal Reserve, this report strengthens the case for keeping rates unchanged in September. Markets cut the probability of a September hike to about 38% after the data, but policymakers cannot ignore the risks ahead. The US has so far seen limited pass-through from the Gulf oil stock, partly because of its position as a net oil exporter and existing inventories. That cushion may not last. With oil prices rising again, August inflation could be firmer, leaving the Fed with a difficult choice between supporting growth and keeping inflation under control.